In the last 5 decades, IFRS has gained greater acceptance and recognition around the world. In this video, I'll discuss the global reach of IFRS and will highlight the list of countries that have adopted, permitted, or neither adopted nor permitted the use of IFRS standards for their publicly listed companies. Hi friends, welcome back to the channel. If you're new here, I'm Yama, a certified management accountant working in the US with a master's degree in accounting and finance from the UK. On this channel, I share my knowledge and experience on IFRS by providing you with clear explanations, practical examples, and insightful guidance. So let's dive into the video. One of the key moments in the history of IFRS has happened in 2002, when the European Union passed a law that required public listed entities in 30 European countries to prepare their consolidated financial statements in compliance with IFRS accounting standards. The adoption of IFRS by the European countries encouraged so many other countries across the globe to replace their national accounting standards with IFRS. For the record, when we say a country requires the use of IFRS, it means that all or most domestic public entities within that country are required to prepare their financial statements in accordance with IFRS accounting standards. So IFRS becomes mandatory, not an option, when it is adopted or required by a country. Also note that when IFRS is required for domestic public companies, it automatically becomes a requirement for foreign companies operating within that country to apply IFRS. On the other hand, when a country permits the use of IFRS, that country typically maintains its own national accounting standards for their domestic public entities, but permits IFRS either for foreign entities operating within its jurisdiction or for both domestic and foreign entities. For instance, in the United States, domestic public entities are required to use US GAAP, but foreign entities operating in the United States are permitted to prepare their financial statements in accordance with IFRS without reconciling them to US GAAP. As of 2024, the IFRS Foundation has analyzed and profiled 168 jurisdictions to see which countries require, which ones permit, and which of them neither require nor permit the use of IFRS accounting standards for their publicly accountable entities. The IFRS Foundation uses the term jurisdictions instead of countries to include regions within countries and international territories with distinct legal and regulatory frameworks. For example, Bermuda is not an independent country by itself, but an overseas territory of the British government, and IFRS standards are permitted but not required in Bermuda. So here is the summary of IFRS usage in 168 profiled jurisdictions. Of the 168, these 147 countries require IFRS standards for their domestic publicly accountable entities. These 12 countries permit but not require IFRS accounting standards. This one country requires IFRS accounting standards for its financial institutions but not for public listed companies. Of the remaining 8 countries, these 7 countries neither require nor permit IFRS accounting standards, but rather use their national accounting standards. And this one country substantially but not entirely converged its national accounting standards with IFRS accounting standards. Please note that the IFRS Foundation regularly maintains the list and will continue to complete the profiles of the remaining jurisdictions. Thus, the list may be updated in the future. Alright my friend, thank you so much for watching this video. If you've got value from it, then you will like this video where I talk about the basics of IFRS. So go watch that next and I will see you there. Bye bye and take care.